Welcome to our CFP exam prep discussion, focusing on a critical tax concept that often appears on the exam. Today, we're diving deep into adjustments to basis, specifically looking at increases and decreases that affect property basis calculations. Let's start by understanding what basis means. Basis is essentially your investment in a property for tax purposes, and it's crucial for determining gain or loss when you sell or dispose of the property. Getting this concept wrong can significantly impact your exam performance, as it's frequently tested in complex scenarios. When it comes to increases to basis, capital improvements are the most significant factor. A capital improvement is any addition or change that adds value to the property, prolongs its useful life, or adapts it to new uses. Here's a practical example. If a client purchases a rental property for $300,000 and later adds a new room for $50,000, the basis increases to $350,000. Common mistakes students make include confusing repairs with improvements. Remember, regular maintenance like painting or fixing a leaky faucet doesn't increase basis, but adding a new HVAC system does. Now let's tackle the decreases to basis, focusing on Section 179 expensing and depreciation. Section 179 allows businesses to deduct the full purchase price of qualifying equipment purchased or financed during the tax year, rather than capitalizing and depreciating it over time. When you see a question involving business property in Section 179, remember that the basis is reduced by the amount expensed in the year taken. Depreciation is another crucial decrease to basis that's often tested. Let's break this down with an example. Suppose a client bought a commercial building for $500,000. Over 5 years, they've claimed $50,000 in depreciation deductions. The adjusted basis would be $450,000. A common trap in exam questions is forgetting to account for all years of depreciation, even if it wasn't claimed on tax returns. Here's where students often get tripped up on the exam. They might see a question where multiple adjustments occur over time and they fail to account for the sequence of events. Always calculate increases first, then apply the decreases. Another frequent mistake is mixing up the timing of basis adjustments with the tax year of deductions. When studying this topic, create a mental framework. Think of basis like a bank account. Capital improvements are deposits that increase the balance. Section 179 expensing and depreciation are withdrawals that decrease it. This approach will help you tackle even the most complex exam scenarios. The exam might present questions where you need to calculate gain or loss using adjusted basis. Remember, the formula is amount realized minus adjusted basis equals gain or loss. If you've calculated the basis adjustments incorrectly, your entire answer will be wrong. To solidify your understanding, practice questions involving multiple basis adjustments over several years. Pay special attention to scenarios where property has both business and personal use, as these tend to be more challenging and are favorite exam topics. When preparing for this section of the exam, focus on understanding the underlying concepts rather than memorizing rules. Know why basis adjustments matter and how they affect the overall tax picture. This deeper understanding will serve you well when facing those tricky exam questions that combine multiple concepts.